Hello traders, this could be one of the most important video recordings that I do. I'm going to go through and analyze one of the trade logs from a member of ours, and I'm going to dissect every single losing trade that they had. It's critically important for you to call out all of these marginal trades and these losers. So let's take a look at what went wrong. Before we get started, this is my homepage. A lot of you are frustrated and you don't know how to find the answers. That's exactly what I'm going to be doing today. You must have a systematic decision-making approach when you're trading. This is your process. This is your rule base. On our website, for members and for trial takers, you can go in and click the edge, and then you'll see the system. This is a course that's taken me a couple of years to write, and I still have about 30% of it to complete. But market analysis, you can see it's fundamental analysis, long-term technical analysis, short-term technical analysis. You have to get your market bearings before you can do anything else. Market first, and I go through how to read price action. Two different types of bearish trend days. I'm just clicking on a random article. You can't just read these articles. You have to study them. When I annotated these charts, I wrote every single sentence in the paragraph and I referred to the chart. You have to be able to recognize these price patterns. It took me years to do this. I've made it much easier for you. If you read this material and study it, you're going to dramatically reduce the time it takes you to become a proficient trader. A lot of people tell me, I want to be a trader, I want to be a trader. I'll do anything to be a trader. Really? Very few people go through the process, rip everything open, and spend 50, 60, 70 hours a week to do this every waking hour. This is not easy. It's very difficult. Everyone wants to trade. As long as you have a wallet, you can trade. You may not make money. You're probably going to lose money, but there are very low barriers to entry. So I can't emphasize education enough. And that's why I started this whole YouTube channel. It's free. It's a free resource. Watch as many of my videos as you possibly can. So let's get started. Let's take a look at some trade logs, and let's see where one of our members went wrong. I'm going to be using Option Stalker Pro to do the analysis. I've taken all of their trades and I've put them into a watch list so it'll be easier for me to take a look at each one of them. And I also have timestamps, so I'm going to move that document over. And this will allow us to really drill down even into a 5-minute chart, and we'll be able to see exactly when they entered the trade. So these are all Eastern time frames. So I'm not going to show that because I can simply refer to the time. Let's get our market bearings. That's where everything starts. If you get the market right, your odds of success go up dramatically. If you ignore the market and you have tunnel vision, then your odds of success go way down because you just focused on an individual stock that has temporary strength without knowing what the context of the overall market is. So let's take a look at the S&P 500 on a daily chart, and let's get our market analysis done. You can see, and I'm not going to spend a lot of time on this, the green line is AVWAP-Q. This is a starting point for a VWAP line, and it starts after triple witching. I believe it is extremely relevant, and I believe that it is used by asset managers when they allocate to equities and bonds. So on indices, we use AVWAP-Q. When we get into individual stocks, you'll see a red line. That is AVWAP-E. That is anchored to each one of the earnings dates. So 2 steps forward, 1 step backwards, 2 steps forward, 1 step backwards. Now the market has broken down below AVWAP-Q, and we're starting to see some weakness. We've also got upward sloping trend lines that have been breached to the downside. So the market looks like it is in correction phase. It looks toppy. So when you have a short position on and you short at this breakdown, we have to wait for those technical breakdowns. We don't guess that the market is getting toppy. We don't short tops. That's a great way to lose a ton of money very quickly. We have to wait for those technical breakdowns. When we have the technical breakdown, trend line breach, AV WAP Q, moving averages, okay, now we can start to get short. But we can see when the selling pressure accelerates that the market is probably going to bounce. And it's because of the prevailing pattern that we've seen over the course of the last couple of years. So you take your gains on your shorts and you see what the bounce does. Oh, hey, look, this bounce was actually pretty decent. It got back above the AV WAP Q. But we do have a lower high double top. Okay, we started to see some resistance before we even challenged the high. That is slightly bearish. Oh, now we have another lower high and a downward sloping trend line. Okay, I can start having confidence in this downward sloping trend line that we are hitting resistance. So you can start taking some short positions when we breach that AV WAP Q, and you can continue to add to them. Whoa, we're getting pretty close to the 100-day moving average. That's this purple line. The black line is the 200-day moving average. So long red candle closing on its low. This also happened to be the reaction to the FOMC statement. Material news, heavy volume. Okay, we could see some follow-through selling below that 100-day moving average. When we test these major moving averages, how do we want to attack them? We want to obliterate them. We don't want to poke around at them. We want to obliterate them on heavy volume. Then we know that that breakdown is legitimate. Sellers are so aggressive that they don't care what buyers are in the way. They are smashing bids. By the same token, buyers become very passive. They back off of all their bids, believing that they will be able to buy at a lower price. And that's when you blow through these levels. Now we start coming up to the 200-day moving average, and now we start seeing some tails. They try and knock it down, and they can't. They try and knock it down to the 200-day moving average, tail, 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 tail. These are signs of support. Even though the price action going into the 200-day moving average was soft, it's not super weak. What would super weak look like? Long red candle closing on its low, followed by long red candle closing on its low, followed by long red candle closing on its low. That's what we call stacking. No overlap, just relentless selling pressure on massive volume. And I talk about volume time and time and time again. And for some reason, people are oblivious to volume. We need to have the volume. That's what tells us the institutions are involved. Our goal is to follow the smart money. When we have mixed overlapping candles like this, some red, some green, they're all retracing, this is a weak move. It is similar to every other move that we've seen in the market for the last 2 years. When you get the nice drop, you can expect that there's going to be a bounce. How do we know there's going to be a bounce? We look for these major technical support levels. Then when you start seeing compression and tails under body, you know, hey, I should not be initiating new short positions here. I should be taking gains on my short positions that I already have on because I'm going to get a bounce. When we go to the sidelines and we get the bounce, then we evaluate the height and duration of that bounce. If it's brief and shallow, we know that sellers are still engaged and they're pounding bids. Then perhaps we would get a breakdown through that support like this. But when we see that the market is starting to rally off of these support levels, then we know let that bounce unfold. If it's very long in duration and if the height is very good, then buyers are back in control. We let it run until there are signs of resistance. And if there are no signs of resistance, then we have to start watching. Okay, well, right here, if we blow through that 100-day moving average with a long green candle closing on its high, and we take out this downward sloping trend line right here on a D1 chart, we start shifting into bullish positions. We start taking long positions. Good thing we took gains on our short positions in here because we didn't know what this bounce would look like. So that's how we handle things on a D1 basis. The same principle applies to an M5 basis. We're not always going to get the market right. And that's why we trade stocks with relative strength and relative weakness. That is our edge. And I'm going to show you that as we go through these trade logs. So the first trade on Win was on September 29th. And we're going to take a look at that, and we can see Win was a long position on September 29th. So, mind you, let's take a look at the market, and I'll hover over September 29th. Here we've got a little bit of a market bounce. So you can see that the market is trying to get up to that AVWAP-Q, but it gaps up. And then the entire day, the market sells off, sells off, sells off. Okay, it's not ready to bounce yet. That was a pretty heavy round of selling. So now our first position that we're looking at, which is a loser, tried to get a long position on. You're not always going to have 100% long positions, 100% short positions. You could have a mix. So this Win position could have simply been a nice long position to hedge some of the short positions. And that's okay to do, especially if Win is breaking out on heavy volume, has technical resistance levels that it's been able to move through. Great, okay, that makes sense. Win could still do well on its own. As long as the majority of our trades are favoring the short side, we're okay. But we don't have really enough to tell us that this bullish hammer was going to be a short-term low. So we have to be very, very careful. Okay, let's take a look at what the M5 chart looks like on the 29th for the SPY. So first we get our long-term market bearings, then we get our short-term market bearings. And I go through all of this in the articles that I showed you. And so right now we've got September 29th. So we can see going into September 29th, we've got some fairly choppy price action, mixed candles, not a lot of volume heading into this day, and we get a gap up. Gap ups are frequently faded. I like trading reversals much more than I like trading gap and goes. And I also describe this in my articles. Gap reversals provide us with an excellent opportunity because when it reverses, we've got all of this gap that can easily be filled in. So we've got great profit potential. So if I'm looking at entering anything long on the 29th, I've got to kind of be scratching my head going, I'm not sure. You know, we've got a gap right now. First candle is red, closing on its low. Okay, so we're definitely not in gap and go mode because this would be a long green candle closing on its high. Volume, pretty good. So we patiently wait. We also have a bearish 1OP cross right here. When you're thinking about taking a long position, and let's use Win as an example. I haven't even looked at the stock yet. I don't know what Win looks like. Immediately, Well, there's a bearish 1OP cross on a gap up with the S&P 500. I should wait to see what the market does. Because if that bearish 1OP cross produces, then when is going to give me plenty of time to enter a long position. And that's exactly what happens. As you can see here, that now all of a sudden we take out the low, we take out the prior day's high, long red candle in here. Okay, this is looking like a gap reversal. We also know on a D1 basis that the market has been weak. So we have a longer term market tailwind bearish. We have a gap up. We're in the gap. This is looking kind of like a gap reversal. There was no reason for us to take a long position on WIN. And we are going to take a look at WIN stock right now. So this is the process. And that long was at 10:53 a.m., which these are all Eastern times, so it would be 9:53 my time, which is about 90 minutes after the open. And let's take a look at where we were at that juncture. So at approximately this point right in here is where the long position is initiated in WIN. Well, we're making lower highs in the market. The market is below VWAP. That's the blue line here. There's no real reason for us to take a position in WIN. So let's take a look at WIN. What does the underlying stock look like on a daily basis? Market, daily basis. Market, 5-minute basis. Get that context. Get your bearings. Stock, daily basis. Stock, 5-minute basis. That is the process. And that's exactly how my course is written so that you can follow through that decision-making process. So we're through the market process right now, and the market's telling us any long positions, it's going to have to be something absolutely outstanding, incredible, never seen anything this good before, green stack candles, heavy volume, great D1 chart. No, I'm not seeing that at all in WIN. In fact, I'm seeing a really choppy stock, back and forth, mixed overlapping candles, longer term downtrend, stock below all the major moving averages, stock below AVWAP-E, and I'll hover over the 29th here. So this is the 29th in here. We get this little bit of a run up early in the day. I got to tell you, there's nothing in this chart that says buy. Nothing. So that is what you should have been deducting from your research when you went through your trade logs. Okay, well, so we're not really seeing anything compelling on a daily basis. We're not breaking through any major technical resistance levels. The volume is pretty wimpy. We do have a little bit of relative strength in here. Orange line above 0. So, okay, the stock has been a little bit strong relative to the market, but that could just be a bounce from an oversold condition. Let's go into the M5 chart on WIN, and let's go back to the 29th and take a look at that chart to see if there was anything compelling. And right here, as we look at this, I mean, the one thing that I've already pointed out on a D1 basis is that stock is super choppy. So this is the 29th. I mean, look at this price action. When you look at a stock, oh, look, it's up, up, up. Whoosh, the bottom falls out. Uh-oh, stacked red candles. This is what Pete told me to look for. Yeah, well, you know, the volume is super light at this juncture. So this is a nice drop, but then look what the stock does. Whoosh, out of nowhere, it rallies. What does this tell me? It tells me nothing. It tells me this is a choppy stock. Okay, so I can expect two-sided moves. There's the day before, choppy as heck. When you see a super choppy stock like this, here's the message. There's no hurry to take a trade. I don't care how good it looks on the open. It could be stacking all the green candles it wants to. If it doesn't have major breakouts through technical resistance, if it doesn't have massive volume, it's not worthy. So here you've got this nice gap up above the previous day's high. We know that the market had gapped up this day also. So the stock is just following the market. Plus it has been sold hard. So this is an oversold bounce. And here we can see that this is about the entry point. It was, yes, about 90 minutes into the open. So 10:53, yeah, this is the entry right here. Yowzer. We've got everything working against us, and we're buying the high of the day. Off the high of the day, we get a long, bearish, engulfing candle, a key bar, in fact. Not a good entry point. So now we start slipping and failing. I'm going to try and get through each one of these a little bit quicker, and now that I've painted the market context, I'll be able to do that. So when was not a good pick? We had all sorts of things working against us. We're trading against the market trend. We had a gap higher. We had a bearish 1OP cross on the S&P 500. We needed to see how that bearish cross played out. If we had waited to see what that SPY cycle had done, we would have been waiting and waiting all day, and this loss would have been avoided. So, and the stock itself, not a very compelling trade. So next on the list is McDonald's. So I'm going to click on McDonald's, and I'm going to bring in the trade log. So this was on October the 2nd. McDonald's was a short position. Okay, that's cool. We kind of know that that agrees with the market. And the trade was initiated at 10:30, approximately an hour after the open. So let's take a look at McDonald's and see what that daily chart looks like. I'm going to go back in just because it's October 2nd. So what do we know from the chart right now? We know that we've got a gradual drift lower. The previous day, the market opened on its high. We had a gap up, and that was a gap reversal with the market closing near its low. Okay, we still have some decent selling pressure in the market. So this is conducive for taking short positions. So now let's go into the McDonald's D1 chart. Oh, now that is some heavy selling pressure. And we're going into the 2nd of October, and we can see that the stock is breaking down below the prior day's low. Excellent. The volume is heavy. We have relative weakness. These are all really good things. We've got a nice trade here. I'm also going to put up our past trend lines because we need to see what was coming into play here. And here we can see that those are some significant horizontal support lines. We call these, that's a low plus, this is a low minus. Both of them breached, and they are breached significantly. So I'm going to take that off so that our chart is not obscured. And now we're going to go into the 5-minute chart on McDonald's. And we're going to take a look at what the stock was doing on the 2nd. And if we go into the chart on the 2nd, we can see that the stock gapped down with the market. This is all nice stuff. It's below the AV WAP. We've got excellent volume right in here. This is a decent looking trade. I like this one. I think this is going to be a nice trade. You can see how the stock continues to slide for quite a while. So, nice trade. I don't see anything wrong with this trade. Looks actually quite good. Now, we had the entry about an hour after the open. So let's check the entry and see how that was. Again, we're shorting on the low of the day. And this is an hour after the open, so let's go in and take a look at the S&P 500 on the 2nd. And this is October 2nd. There's nothing really compelling to tell me that the market's going to go either way. You've got a bearish 1OP cross, so that's agreeing, saying that yes, we should expect some selling pressure. Still aren't below that prior day's low. I oftentimes like to get below that prior day's low before I initiate a short position. But McDonald's was actually pretty dang weak. And you can see that, yes, it was drifting lower when the market was relatively flat, and that's where we get the relative weakness. Now, McDonald's does retrace a lot, so it can be pretty choppy. You could have set an alert here and let me know when the stock regains relative strength, and then here is where you get relative weakness. That would have been a nice entry point. So you could set an alert because we didn't have the market falling apart. There was no real urgency for us to take the trade. But you can see, I mean, this was a nice pick, and the trade worked out well. So if you put a little bit of the position on here at the low of the day, okay, you see this, and you see it not bounce very far, can't fill in the gap on a flat market day, that's bearish. Gets back below the VWAP, and it's got relative weakness. You can enter or add more right there. McDonald's, that's a nice trade. I like that one. ENPH. So I'm going to put this over so you can see these trades. Now, this is on the 3rd. So we've got a couple trades for the 3rd. We've got ENPH short, and that is about 3 hours after the open. And we've got a Caterpillar short. So we're going to look at both of these entries. This is about 2 hours after the open. So ENPH, and we're going to go into, let's refresh our memory here. Now we're in the 3rd. So this was the 2nd. Now in the 3rd, the market opens right here, which is the low from the prior day. So it's gapping down, and we're already at the prior day's low. Okay, this is pretty good. So we want to take a look at that price action. I like the fact that it's been able to do that. And let's go into the 5-minute chart and see how October 3rd is shaping up. And there we can see we get this gap down. Market tries to rally up in here. We've got a bearish 1OP cycle going, and it can't quite get into the gap. It cannot fill that gap. Then we get a long red key bar through the low, prior day's low, and through the low of the day, and through VWAP on what? On heavy volume. Ding, 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 ding. Good. This is a great setup for shorts. So now we want to make sure we're ready to take some short positions. We know we've got the D1 market tailwind that we need, below the AVWAP, heavy volume. All right, let's see if ENPH is a good stock for us to short. And again, it's important that you get the best of the best of the best of the best. If you find a choppy stock, usually keep looking. What do we need to trade choppy stocks for? Let's see what ENPH looks like. It's typically fairly choppy. So this is a daily chart, and we can see how the stock has been drifting lower. Relatively compressed price action, very orderly, and that's good. Relatively compressed, and so we can see there's lots of retracement, lots of green candles, red candles. Volume is not that good. Let's go into the 3rd, and there we can see on the 3rd, we've got a breakdown. We've got a breakdown through this technical support level. Let's see if any of the trend lines are coming into play. And yes, we've got some trend lines coming into play. So this is a low minus trend line that's been breached. That's good. Right here, do we have the relative weakness that we're looking for No, not really. In fact, the stock has been compressing when the market's going down, so it's been relatively strong. Tiny bodied candles, lots of wicks, lots of tails. Not ideal, okay? But we do have a little bit of a breakdown here. But we shouldn't expect anything big, unlike McDonald's that we looked at earlier that had a full head of steam. This stock, every time it pulls back, it retraces. So, not a huge fan of this particular stock because of the compression that we're seeing here, and it just doesn't have the volume. And when we start breaking low minus trend lines, so when you have a descending trend line that connects the lows, we call that a low minus. It's not nearly as reliable as a breakdown that you might have when you have an upward sloping trend line that connects the lows. What do you mean? Well, these are upward sloping trend lines that connect the lows. When you have these breakdowns, those are much more significant. Upward sloping trend line breach to the downside, those are more reliable. So these are not quite as reliable, but mainly it's the mixed overlapping candles, the lack of volume. Yes, we are below all the major resistance levels, so those are all good factors, but I'm not seeing the type of oomph in this stock that tells me, yes, this is the short that I need to take. Let's take a look at the 5-minute chart, and we're going to go back, and we're going to take a look at the 3rd of October and see what the stock did. The one thing that you should pick up on instantly is all these mixed candles with long wicks and long tails. That tells you that this is just a choppy beast. I had mentioned this earlier. When you have a choppy stock, you do not need to rush into the trade. There are going to be plenty of opportunities. And so we can see mixed overlapping candles. You get a nice little drop, a new low of the day, and boink! Okay, I should expect this because that's the nature of the beast. So it runs up to the AV WAP and then it has just as big a drop after that AV WAP. So this is what happened on the 2nd. So yes, the stock did close near its low of the day. Yes, we had market weakness. And then we get this gap down. Stock cannot fill that gap. And then it has this really big drop. Well, this is where the short was initiated, I believe, at 1240. Okay, so actually this is where the short was initiated, pretty much on the low of the day. There are a few issues with this, and we're going to be taking a look at what the S&P 500 was telling us at this juncture during the trading day. But what I see immediately is that you've got this drop and you have a lower high, so it finds resistance at the AV WAP. Okay, that's cool. No problem with that. Now we make a marginal new low. That tells me that there is some support here because buyers are coming in. What we'd like to see is a little bounce below the AV WAP and then stacked red candles with a significant new low of the day. Didn't happen. Now we get this long green key bar in here. That really tells me that there are some buyers. We back off of the AV WAP again, tiny bodied compressed candles in here, another marginal low. Again, wham, wham, wham is what we want to see. Long red candles closing on their low. We're not getting that. So let's take a look at what the S&P was doing at this particular time and whether or not a short would have been justified there. So we'll go in, 5-minute chart. This is the 3rd right in here. And you can see at 1240, okay, so this is not particularly bad as far as entry on a short, taking into account what the market is doing. So we get this drift lower, long red candle. This is all good. But now we're starting to see lots of wicks, lots of tails, tiny compressed bodies. This tells us that this move is not particularly strong. So we get this bounce right in here. AV provides some resistance. So no problem. I mean, I don't have a problem with taking short positions at this particular point in time. The only problem that I really saw with this trade is that the stock is compressing and the stock is not able to make a new low of the day. So if I see this type of price action where the market is selling off and selling off, I want the stock to get buried. I want to see it get pummeled. Well, we know from the daily chart on EMPH that it is stubborn. It's starting to find some support. We know on the M5 basis, the stock is also starting to find support. We know that it's a choppy stock, so there's no real reason to take a short right on the low of the day, especially with the market having these compressed candles in here. You get this breakdown, now is when you want to see that new low. So let's go back into that chart. There's nothing here. I mean, this is when the market's making a new low of the day. The stock is not making a new low of the day. In fact, we've got a couple of green key bars in here. So not a particularly attractive short position, but these are some of the keys that you need to be watching for. So on any market bounce, the ideal setup for this is that the market bounces. And what does the stock do? It can't get off the deck. So here you can see marginal new low for the day. It can't get off the deck, but in this area, and let me overlay the S&P so you can see it a little bit better. I'm going to overlay the SPY, and we're going to go into that same day, and we'll zoom in a little bit so we can get this exactly right. And so here is the trading day that we're referencing. So you get this nice little lift off. This is cool that the stock was not able to get off the deck right in here. So stock makes a new low when the market is bouncing. I like that. What I don't like is when the market finally starts to roll over. The gray line is the S&P 500. Market finally starts to roll over. What does the stock do? It starts moving higher. So waiting for this move to be exhausted, waiting for the S&P to roll over, this is when you would want to consider taking this short, not on the new low of the day. So as the market starts to roll over and you see the stock taking higher, no, I'm not going to take this short position. So that should have been the conclusion that you got off of that chart, and by waiting for the S&P to finally hit that resistance point. So we had another stock that was traded that day, and it was Caterpillar. So we already kind of know what the market context is. Let's take a look at Caterpillar and see how that shapes up. Caterpillar, 11:35, so 2 hours after the open. And let's see what we got there. And this is on October the 3rd. And here we go. Okay, so on a 5-minute basis, first we want to zoom out, take a look at the longer term chart. Okay, so this is a short position. We are below the AVWAP E. We are below the 50-day moving average. And this is the third right in here. So we have a horizontal support level right here. Let's put up our trend lines, and here we can see that we had a nice breakdown through this horizontal support level, this trend line, if you will, and that little tail right there tells us that the stock was actually below that technical level. Volume was okay. Stock is relatively weak. All right, I don't have a problem with any of this, okay? It looks like Caterpillar could be rolling over. It also is a pretty choppy stock, but nothing that tells me on a D1 basis that this is not going to be a good trade. I think it could be a good trade. So let's take a look at the M5 for that particular day. And let's see what the stock was doing. Well, it starts the day off in rally mode, and then it easily gives that up. Now it's below the VWAP, and it is below the new low of the day. This trade was initiated 2 hours after the open, which would put us right about here. Again, near the low of the day. Now, this is persistent selling pressure. There are wicks, so every time they try and rally the stock, they sell it off. Every time they try and rally the stock, they sell it off. So this is not particularly bad, but what we need to do is to take a look at what the market was doing on the 3rd, and we know that the market had been selling off, and then tiny body candles. We had this bullish 10p cycle right in here. Now that cycle is running, so we can expect some weakness in here. So this is about, right in here is about where the short was established. I would hold off on initiating shorts down in here when you are coming off of a bullish 10p cross. Wait to see what this cycle produces. By the end of the cycle, we're up in here, so we're starting to get a little bit of a bounce. When the market bounces, we don't know. Stack green, stack green, stack green. Might as well wait. We don't know what the stock or the market are going to do at this juncture. So let this little cycle run its course. So now we can draw a upward sloping trend line here visually. All right, we're starting to hit resistance right here at the AV, or excuse me, at the VWAP for the day. All right, so the market's starting to show some signs of weakness. We have a bearish engulfing candle off of the VWAP. Awesome. This was not a big bounce. It didn't last a long time. We have D1 market weakness. Yeah, a short could really make sense here around that 105 mark. So 105, we are right about in here. As far as, 105, we are right about in here. This is the 3rd. Okay, the stock is back below VWAP. Cool. Had a little bit of a bounce, not too bad. Found resistance at the prior day's low. Okay. Had this nice tandem of red candles, getting it back below VWAP. This would be your entry point. You have relative weakness, orange line below 0. That would have been an awesome day trade. Down here, you're entering too early because you had that bullish 10p cycle. Let it run. See what the market does. See what the stock does. The other thing that you can do, which is really nice, is you right-click, create alert, and you say, hey, you know what? When this stock goes relatively strong, so I want it strong relative to the S&P 500, and then I want it to go weak relative to the S&P 500 on an M5 basis, you can add that alert and save it. So here's how it would have worked. So down in here, you're like, dang, I love this selling pressure. This looks great. The D1 chart on Caterpillar looks good. Volume's not very good, by the way. We needed better volume in here, and we didn't have it. So I'm not real big on, for that reason alone, taking a short position in the stock. But if you still felt confident in it, now all of a sudden you gain relative strength, and here it goes relative weak. So you set that alert here. Well, it is already relatively weak. So it has to go relatively strong and then relatively weak, and you will get your trade alert right here. And the advantage of using the alerts is that you can evaluate what the market has done in that meantime. For the market, how big was the bounce? How long did it last? For the stock, how big was the bounce? How long did it last? Are the resistance levels still intact? Does this still look like a weak stock? Well, we're below the prior day low, we're below the VWAP. Okay, this is your entry point, and you've got relative weakness in the stock, and that gives you a nice, probably about a $2 winner. Here, when you enter on the low of the day, now you never get back down to the low of the day. So, yes, market was relatively weak on a D1 basis, but if this was intended to be a day trade, now all of a sudden you're adding to your risk profile because you're having to hold a position overnight. Now, the next day, you do get another drop, so you have an opportunity to make money on the trade, but this would have been a much better entry point than this. Let's continue. We're getting through this. It's going to take a little while, but this is going to be a great lesson. Now we're into October 4th, and then we'll go to the 5th, and because we have our market bearings, we will be able to breeze through this. So on October 5th, let's take a look at the market. October 5th, okay? First of all, we're starting to get support above the 200-day moving average. As I mentioned early in the video, this is a major support level. The market has been making 2-step lower, 1-step back, 2-step lower. We might be getting ready for a bounce here. When we break these major support levels, we want to crack below it, just like we got through the 100-day moving average. We don't want to poke at it, because then that is likely to attract buyers. It is support. It is likely not to fail. That's what's shaping up here. So now we're into the 4th, and we know that on a market basis, we should be more inclined to take gains on our short positions than we should be to initiate them, because it looks like a market bounce could be coming. We also had the jobs report coming out the day after on October 5th, so we needed to be, or on October 6th, excuse me, so this is the jobs report in here. So we need to be fairly careful because we're starting to find support above the 200-day moving average, which is where we want to find support on these technical levels. We want to find it above that support level because that tells us that buyers don't believe that that support level is even going to be tested. They're so aggressive that they are willing to buy above it. That's kind of what you like to see in a support level. When you hit a resistance level, before the market can even get to this resistance level, sellers are like, no, we're not going to get there. I want to sell right here. I'm comfortable selling here. Sell it. Same thing here. No, we're not going to get back here. Sell it now. They're aggressive. That's how these trend lines are formed, and that's the mentality behind it. So the fact that you're starting to bounce before it even gets there, that's a bullish sign. Not to mention the 2 steps down, 1 step back. So you're looking for a bounce in here. So now let's take a look at the price action on the 5th, and then let's take a look at the trade that was done. And this is the price action on October 5th. So you start the day off, and you've got mixed overlapping candles in here, green and red. So the high from the previous day couldn't even challenge it. We're starting to drift lower. We've seen market weakness over the course of the last 2 months to that point, so there's no reason to think that the market all of a sudden is going to be gangbusters, go, go, go. So you start to see this move, and this is a wimpy move. Yeah, you get one long red candle in here. I would rather see, instead of one long red candle closing on its low, I'd rather see 4 or 5 smaller ones, each closing on their low, because that tells me that the selling pressure is persistent. In here, we've got just a lot of chop, and that's kind of the context. Yeah, the market's been weak, but we got mixed overlapping red and green candles on a D1 basis, and now buyers and sellers are pretty paired off. So sellers have the ball. They're going to see what they can do with it. We've got a bullish 1OP cross right in here. Do I need to be taking any short positions? If I were going to and I had something really cracking down hard, I suppose I could try one in here early. HSY. That was the short that was initiated, and we can see that was on the 4th. Excuse me, we're still on the 4th, not the 5th. So let's take a look at HSY. So it was initiated on this day. So here you got a gap up. Now we have a gap reversal, but we can't test that prior day's low. Lots of wicks, lots of tails, choppy price action. Volume is above average, so not horrible. Do I see anything that tells me that I've got to initiate a short position? Not in particular. Maybe the stock itself is very weak. So let's take a look at Hershey's and see what the stock looks like. So on a D1 basis, heck yeah, this is weak as all get out. Look at this thing stack red candles, just drifting lower, below all the major moving averages. Yeah, this is all good stuff. So if we go into the price action on the 4th, we can see the stock opened right here, had a bullish hammer the previous day. Could that be support? We know the market had been relatively weak, but this stock was able to bounce. But let's take a look and see what that M5 chart looks like on the 4th. But I do like that really heavy selling pressure. So let's see what that entry point was like. And I'm just looking back. That was initiated an hour after the open. And so this is on the 4th. And an hour after the open is right about here. Again, on the low of the day. If you had 3 or 4 of these on massive volume, just like this, one here, one here, one here, on massive volume, okay, maybe you would short the low of the day, but you don't have that. You got a lot of mixed overlapping candles in here, and this is where you get short. So we don't like shorting the low of the day. And let's take a look at the M5 chart an hour after the open and see what we had working here. Not really anything as far as 1OP. I mean, this is all just kind of random price movement. The market's not going higher or lower. For me personally, to want to short a stock and to chase the low of the day, I need to see better market action, and I want to see that prior day's low taken out. Again, this is if I am chasing a super weak stock with stacked red candles, but I'm not doing that in HSY. The D1 is very weak, but the M5 is not suggesting that I need to be that aggressive, because we've got plenty of overlap here. A couple of long red candles, but instantly retraced and retraced. So is this a great place to short? No. What I would do here is, if I still really like that short, I can set an alert. Let me know when the stock regains its relative strength, and then let me know when the stock is relatively weak. Well, you would have gotten a signal probably in here somewhere, but at that juncture, you can see that is a long green key bar. Look, the stock is above VWAP. This is not looking like such a great short. Oh, wait a minute. The stock is back above the prior day's low. So, bullet dodged by setting an alert and not by taking the new low of the day. That's how you need to be looking at it. And now we're going to go to the next trade on the 5th. We've got 2 trades. We've got target. So let me put up TGT. And I'm just going to tell you that on a D1 basis, now the S&P 500 is starting to find support at the 200-day moving average. We also know that on the 5th, which is Thursday, we have the jobs report on Friday. So it's going to be really big news. There's a good likelihood ahead of a major news event like that Thursday is going to be a relatively quiet day. So we've got target. Let's take a look at that daily chart. Yeah, this has got some really nice breakdowns. Horizontal breakdown there, below all the major moving averages, below AVWAP-Q. So in general, just an observation as far as the daily charts, relatively good. So decent picks on the daily chart. I think that the M5 entry could be better. So let's take a look at where those trend lines come into play, and I'm probably going to have to put up some of the past trend lines. So let's see where those came into play. Yes, this is a nice little breakdown right in here. So we're all good as far as the actual D1 chart. Target looks very weak. You're starting to see some mixed overlapping candles in here. It's like down, compress, some retracement. So decent, not bad. Do we have to chase that stock? So let's go into the M5 and see what the stock was, what the market was doing on the 5th of October to see if there's anything compelling. So on October 5th, we're below the VWAP on the overall market. But now we can see, and this trade was initiated at 10:36, 1 hour after the open. So we've got a bullish cycle starting on the S&P 500. And we did continue to drift lower. So that would be 1 hour after the open right in here. We've got this bullish cycle starting. Might as well see what the bullish cycle does. Well, in this particular case, it took a little bit longer, and 1OP is early. It's always early. So this just tells us that a bounce is pending, and we get the bounce. Well, by this juncture in here, you can see that we're back above VWAP. All right, this drop back below VWAP might have been a decent area to try a short in. We've got a higher low, meaning that it couldn't get through the prior day's low. We know that the 200-day moving average is very close. We know that the market has been finding support above the 200-day moving average. Now we can't even get down to that level. My thought is the stock's got to be super, super weak for me to try a short. But yes, this would probably be a pretty decent area for me to try a short if the stock is breaking through major support levels on heavy volume D1 and if it's been relatively weak M5. So on the 5th, this is the 5th right here. So stock opens near its high and it continues to drift lower, but you can see it's not below the prior day's low and it's not below the low of the week. And so this is the price action on the 5th for target. And we can see that the stock had some nice stacked red candles in here. Volume was not great. It was okay. It was better than average. We can also see that this is a choppy stock. Yes, the D1 is good, but intraday, no reason to chase because we're always going to get these retracements. So when we have a choppy stock, you don't want to short here. You want to wait for this. Ideally, the stock only gets back to the VWAP and then it rolls over and it goes relatively weak. Well, this one went way above the VWAP, which it's not telling me. Well, so what, Pete? This one went above the VWAP, that one didn't go above the VWAP. What? This looks great. This looks like sellers are in control. This tells me that there are buyers. There are buyers of this stock. When you see that and that, instantly it tells you that there's not really one side or the other that is prevailing. Okay? So yes, you get the big bounce that lasts a long time. When you have a short, you want to see nice, consistent, heavy selling, brief, shallow little bounces, and then we're right back at it because the sellers look at this little bounce and they go, oh, I was hoping it would get higher, but it's not going to. Whap, 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 and then you get another big drop. You don't want to see these long, extended rallies. So on this day, even though I'm seeing this type of price action right now, and it easily takes out the prior day's low, okay, that may be where we take out some stops because that's where these buyers are going to have their stop at that prior day low. They get flushed out, and then the stock never checks that low of the day. So shorting an hour after the open on the low of the day, not good, not justified, seeing the price action and the volume. So no, that was not a great trade. The next day, because Target had that weak D1 chart, you did have an opportunity to take gains on it. Again, plus the market is starting to find support at the 200-day moving average. You should not be looking to initiate new trades. You should be looking to take gains on swing trades. So yes, you could still try some shorts, but you've got to be very selective. This is not one that you needed to particularly chase in here. So KMX was another stock on this particular day that was shorted. And let's click on that. KMX, go back to the 5th, take a look at that, see what it was doing. Ooh, now this has got some really decent selling pressure, and you can see how it's consistently making lower highs all day. Very weak. Decent volume the whole way. So I'm already kind of liking this 5-minute chart. Let's see what the daily chart looks like, and this is on the 5th. So you've got a weak reaction to earnings before the open. Stock is well below all the major moving averages, and you can see how it's below the AVWAP E. Yeah, I like everything about it. Now it's just taking out the low from the week. This all looks excellent. KMX was initiated at 12:37, about 3 hours after the open. So let's take a look at where it was 3 hours after the open, then we'll take a look at the market. And so on the 5th, oh, here we go again, I mean, this is some strong selling pressure here, but we do see lots of wicks, lots of retracement, candle bodies, fairly small, starting to compress in here. That is a sign of support. And then you enter the trade right in here on the low of the day, and the market or the stock just can't get any lower, and then you get this gigantic green key bar off of the low. This is a pretty bullish sign. This is a sign that there are buyers. Let's line that up with what the market was doing at 12:30 and see if that might have provided us with a clue. And at 12:30, which is right here, okay, so at 12:30, the notion could be we had this tiny little bounce, and now we're trying to get back below that VWAP, and a stock that's already on its low of the day should continue to drift lower. That would be the premise for the trade. But again, in the context of the 200-day moving average, in the context that we couldn't even check the prior day's low, do you need to get aggressive with shorts? Not really. This would be when you want to see the stock make a new low, because you've got the S&P 500 below the VWAP, and that's where you would be looking for weakness in CarMax, and the stock makes a new low, but then you get this long green candle in here. You've got to be wary of that. This is where you probably would want to just go to the sidelines. You can scratch the trade. It's not the end of the world. I did really like the D1 chart. I liked everything about the selection. There's nothing really wrong with this trade, but you can always go to the sidelines. You like to see a nice long red candle as the market starts to roll off of that VWAP. Doesn't happen. The stock actually starts to look pretty strong. You got higher lows in here, so scratch the trade, live to fight another day. You can see the next day you did have a chance, if you held this short overnight, to exit it for a gain. So that is the last one there, and now we're getting into a number of trades, lots of trades on the 6th. So we're going to knock through a bunch of these. I'm going to go to the 6th. I'm going to talk about that specifically because this was kind of a market trap on the 6th. And we'll go into the D1 chart. So now you've got 1, 2, 3 tests of the 200-day moving average above the 200-day moving average. and now you have a gap down on the open. This was the jobs report. Major news event. So we're going to go in, we're going to take a look at that gap down. So here's your gap down, and you've got a bullish 1OP cross here. What do we know about this gap down? Well, first of all, we got this long red candle. Okay, perhaps this is where they're going to really nail the market. Well, still hovering right above the 200-day moving average, and we can barely take out the prior day's low. So mixed overlapping candles, long tails, long wicks, green and red. This is support. There's nothing going on here. We're right on that VWAP line, got a bullish cross. This is not where you start initiating short positions. You need nice stacked red candles, heavy volume, blow through that 200-day moving average. No poking around, blow through it. If you don't see that, it's going to hold. It ends up being a fantastic buying opportunity. So if you had overnight swing trades and you get this nice long green candle into the gap on a bullish 1OP cross, 3 previous tests above the 200-day moving average, can't even get down to it. This baby's going to bounce. I need to take profits on my swing shorts. If I'm day trading, I need to shift gears pretty dang quickly. Let's see what else we get out of this move. Heavy volume. Green, 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 gap fill. Okay, here's your gap fill. At this juncture right here, gap down, this is a bona fide gap reversal above the 200-day moving average. Okay, I'm not taking any short positions in here. In fact, I'm taking gains on my short positions. I'm scratching any shorts that I might have initiated. I am shifting gears to the long side. I've been expecting a market bounce. 2 steps down. Where's the 1 step backwards? We're going to get it right now. That's what the market's been doing for the last year and a half. That's what we should be expecting. So as this move unfolds, you can see how now we're stacking. This was a bear trap. So if you're initiating short positions in here, I don't care what they were, this is not a good place to be short. And that's what these trades are. You've got PayPal was one of the shorts, and we'll take a look at that. So in order, we've got PayPal 30 minutes after the open, MNST, and Humana, and SPY actually. Let's tackle SPY first. Okay, so the market gaps down, jobs report reaction, negative, and I could talk about, well, the jobs report was actually hotter than expected, which means the Fed is going to stay tighter, longer, blah, blah, blah. Stop analyzing the damn number, okay? Don't analyze the number. You don't know more than the market. All you have to do is analyze the price action, okay? So stop thinking, oh, this is a really hot number. The market's going to fall apart, and now the 200-day moving average is going to fail. It hasn't failed. It's still there. You haven't seen the stacked red candles. You don't have the volume. Watch the price action. The price action is telling you this is support. So go with it. Don't fight it. Watch the price action. Don't analyze the number. As it turns out, what might have been in focus is the fact that hourly wages were up 0.2%, which is going to ease input costs for manufacturers, and it's good for inflation. Not to mention that we've already seen natural buyers coming in above the 200-day moving average. This is a bear trap. if you fell into it, learn from this lesson. Heavy volume, see you later. I don't care what stock you're trading, it's not going to work in that environment. PayPal is a short, mixed overlapping candles, very choppy. I'm not seeing anything in here on the 6th, right in here, that tells me, it's not even below that low, which I would like to see it eclipse that low. Any long red candle and lots of stacked red candles on the open. Let's see if the stock had that. You go into M5 here. So let's go into M5 and let's take a look at what it did on the 6th. And so, market gap down, the stock did have heavy volume and it did have stacked red candles. So, but this also very choppy stock, the D1 chart does not support this short. Look, we are compressing. Is it weak? Yeah, it's a weak stock. Sure it is. No problem with that. But there's not really anything compelling. There's no big technical breakdown. There's nothing on the D1 chart that tells me at this instant that I need to day trade this from the short side. I also should be in waiting mode just because of the market. We've already hammered that market concept home. So this is a time to be patient and to see what was going to happen with that 200-day moving average. We're going to break it convincingly, or are we going to bounce off of it? So I think this short was ill-advised more for the market's sake than for the stock's sake. The stock is weak on D1, but I'm not really seeing anything compelling on a D1 basis either that tells me it's going to go to hell in a handbasket. The M5 and these stacked red candles were kind of a fake, and that is some very heavy volume as well. But you can see the stock bounces instantly. So as you're waiting for the market to set up, and you're waiting for the market to make a new low of the day and to test that 200-day moving average, you notice that, this move down was very quickly and easily erased, and now the stock is just basically following the market. That short, incidentally, was taken 30 minutes after the open, which would have been right about in here. Yeah, right in here, almost the low of the day. So you initiate it here, and then you see this big bounce in the long green candle above the AVWAP. You can get out and mitigate most of your losses, kind of go to the sidelines and reevaluate. I'm just not crazy about that D1 chart on PYPL. Weak, but compressing, no real reason to take that trade. Let's go into MNST, and let's take a look at that one on the 6th and see what that was doing. So you got a nice gap down, long red candle closing on its low. Now we've got some mixed overlapping candles here. Let's take a look at the D1 chart, see what that's got going. Okay, choppy stock, pull back, rally, pull back, rally. Mixed overlapping candles. So we've got a nice breakdown here below the 100-day moving average. So this is pretty good. It's not doing this. This, by all means, you want to avoid this kind of garbage right in here. This has got some decent momentum. And so when we come into the 5th, you can see long red candle closing on its low. Okay, let's put up some major moving averages here and take a look. And you know what? One thing came to mind. I didn't look at PayPal and see if there were any long-term trend lines that were coming into play, and I should have done that. We've got a bunch of trend lines coming into play here. So that's another warning sign. And this is a significant long-term trend line that the stock was trying to get through, and it was finding support on. Support is support until it's breached with long red candles and heavy volume. So there's another reason to avoid that particular trade. So let's see if in MNST there's anything that comes into play. No, there really wasn't anything coming into play there. And we'll take a look at the past real quick. We've got a nice little breakdown there. That was that long red candle on the 5th. So that's a nice technical breakdown right in there. Okay, so we've got that. That's not bad. Let's go in and take a look at what the stock did on an M5 basis that morning. We could see that it was starting to pull back with the market, so that was decent. From over here. Mixed overlapping candles, though again, we're still kind of waiting to see what the market does in here. That trade was initiated at an hour after the open, which was right in here, low of the day, long green candle. This is all market related also. I mean, once the market lifted off of that 200-day moving average, everything was going to rally, especially stocks that have been weak. So let me take one more look at Monster because I want to make a point. You can see what it's doing today. You can see that when the market started to rally the last couple of days, look what this stock did. Look at yesterday, got hammered. And the market was actually up yesterday. So this is a weak stock. I like the stock pick. Got a long red candle, almost a bullish engulf in here, and then it goes right back down. So there's some volatility. We know that this stock is volatile. It means that we don't have to chase. We want to wait on these entries. But yes, this stock is continuing to go down. So it's actually a nice short pick on a D1 basis. The biggest issue with this trade was the fact that the market was finding major support at that 200-day moving average. HUM was has to be a long position. As I'm not, let's see, on the 6th, I'm not seeing anything that tells me that this would be a short position in here. Yeah, this is a long position, and that long was initiated at 12 o'clock. So let's take a look at that. That is about 3 hours into the open. And this is on the 6th. And so here we go. We've got market liftoff. Stock opens nicely when the market gapped down. This is excellent relative strength that we could see that in the chart. Remember, this is the jobs report. The initial reaction was a gap down. This stock is actually strong. So now the stock starts to climb. And we can see volume is not great in here. It's got a little bit of a volume spike in here. When it's inconsistent, kind of like this is right in here, and you get these big kind of gaps in here, it could just be a buy order. And in here, when you're buying, and that buy was at 12 o'clock, so right in here on the high, chasing anything like this it's tough. I mean, you've got a small pause in here and then some continuation. Take a look at that stock. You can see it tends to be choppy. It's a healthcare company, health insurer. What monster news could they have? They don't necessarily have a new semiconductor chip that they've developed. Don't chase up here. Set an alert. There's nothing that tells you that you have to be that aggressive getting long. Let's take a look at the M5 on the 6th to see if, we start getting into a bearish 1OP cross right in here. That tells us that we're starting to hit some resistance in here. Could we expect a bullish divergence on a day like this? Absolutely. So if you're long in here, you're filling the gap, you're taking out the prior day's high, you're above the 200-day moving average, there's major news, there's heavy volume. Yes, 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 yes. We're looking for a bullish divergence. 1OP crosses over, crosses down, market holds its bid way above the VWAP. Yes, we're going to get continuation on it. So as far as Humana, just wait, see what this little bearish cross produces. Chances are it's not going to produce much of anything. The dip is going to be short and brief, but at least you're just waiting for another 15 minutes or so. You're not chasing a red hot stock that's making a new high of the day. And if you wait that 20 minutes out, and all of a sudden you're like, oh, glad I didn't chase that. Humana D1 chart on the 6th. It's not through this horizontal resistance level right in here. There's no reason to chase it up in here. Is it starting to just, on the high of the day, starting to try and get through it? Yeah, it's trying. Choppy stock. We're not stacking greens in here. It's trying to get through resistance. Resistance is resistance. So there's no reason to think that move, all of a sudden, that Humana's got something great going on. It's an insurance company. Chop, 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 chop. Boring. It's not an AI. Maybe they have AI now for health insurance. I don't know. Last one is SPY. I don't really need to talk about SPY taking a short position on SPY on that gap down right in here because you have very little upside to the trade because the market has not broken the 200-day moving average. This is a major, major support level. And you haven't even tested it, let alone broken it with long red candles on heavy volume. So there's absolutely no reason to take a short position in SPY. There is rarely a reason to take any position in SPY because we can always trade underlying stocks with relative strength and relative weakness. We're kind of knocking through this. I know that this has been a very long video. I told you that if you're committed to trading, that you've got to put the time in. Well, right now, you're putting the time into this video. So let's take a look at Tesla, see what Tesla's doing. This was actually a long position that was initiated on the 6th. And I'm going to wrap up with a stock that looked pretty good. I'm anxious to kind of see what it did today because it looked like a very good short position. But we'll see. So right now, you've got Tesla on the 6th, had this big drop and a nice rebound off of the low. So this is a pretty decent long. It was taken at 225, which is right about in here, again, near the high of the day. Okay, yes, it did fill the gap, which is nice. Is there anything on a D1 basis that is super compelling on Tesla on the 6th? Let's take a look at the 6th. No, you still got horizontal resistance here. You've got a downward sloping trend line like that that's not been broken to the upside. I like the stock because it's got relative strength, so that's good, but it's not through any of these resistance levels. Did you have to buy it that close to the close on the high of the day? You probably could have waited on that. But I do like Tesla in general, but I want to see it get through that downward sloping trend line. If it can do that, all aboard. I'm in. Get through that line right there on heavy volume. Yeah, that's a breakout. We've got a wedge formation right in here. It's above all the major moving averages. It's above the AVWAP-E. It's got relative strength. The market looks like it's bouncing. Checkbox, 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 checkbox. All of the tumblers have to line up. Not some of them. They all have to line up. And that's the process that you have to go through to get to that 75% win rate. You've got to call out all those marginal trades. You've got to really focus on everything lining up. Market D1, market M5, stock D1, stock M5, 1OP cycles. They all matter. What is the price action telling you? So Tesla, I like everything about it. I want it above that downward sloping trend line. So late in the day, earlier in the day, you probably could have gotten long Tesla as it was filling in the gap. Meta is a long that was taken on the 9th. We've got a lot of trades on the 9th, then we've got the 11th. So we're almost done here. Now you're going to start seeing some stocks that actually look good. I did a video yesterday on Meta. I like it. Look at that relative strength. Decent volume. Okay volume. But the stock is getting through this downward sloping trend line, long green candle on the 6th. Look at that beautiful rally. And it was breaking through that downward sloping trend line. This stock position was initiated about an hour after the open, once the bounce was underway, and this was on the 6th. I'm liking this a lot. There it is right there. So this is the 6th. So the stock bounces immediately, fills in that gap immediately. Great D1 relative strength through the prior day's high. Yeehaw! This is the kind of stock you want to be on. And this entry was at 1024. So right in here when the gap had been filled and it was challenging that prior high. Excellent volume. This is a nice trade. This is all you need. So if you have 5 trades during the course of the day, this one trade is really all you need. You could do 5 times as much of this one trade because the price action is so steady. Every single checkbox has been marked. And if you take a look at what did Meta do during the market decline? When the market was selling off and testing the 200-day moving average and bouncing above it, what did Meta do? Relative strength, above average volume, compress, compress, compress above all the major moving averages. Was it selling off? No, it was not. Buyers were lined up, buying when the market was weak. They didn't care that the market was weak. They wanted to own Meta. That's what made it such a dang nice trade. That is a beauty. ZS. Another line that was initiated. Long green candle through AVWAP E. Still has to get through this technical resistance, but another stock that did not sell off with the market when it was testing the 200-day moving average. Lots of strength. These technical levels held. That's the 50-day moving average. Nice little trend lines holding. 100-day moving average. There's the 200-day moving average. This is what the market was testing. Its 200-day moving average. Stock never came close getting through this horizontal resistance now. Yeah, that stock is trying to break out. It is a choppy stock. But on this particular day, we're going to go into that M5. We're going to look at the price action on the 6th. Stock barely gaps down with the market. First bar, right on its high almost, and then instant gap fill. Market hasn't even started to show signs of rallying, and it is making a new high of the day, and it is through the prior day's high, and the volume is huge. Yeah, baby, this is a nice trade. Excellent trade. So this is what we're looking for. This is the good stuff. Okay, so DG was a short that was taken. So we're going a little bit against the market here on the 9th. It was taken 90 minutes after the open. And that was after it was on the 9th. So now we're getting into the 9th. Excuse me if I didn't explain that. I'm off by a day, so I apologize. We're going to retrace very quickly and look at the 9th. So anyway, for Meta, stock puts that in after the jobs report. Beautiful, everything closing on its high. All looks good. So yes, we're looking for follow through on Meta. It's alive. It looks good. 10:24, hour after the open, we get long on the high of the day. Rush that one a little bit. Let's take a look at the M5 on the 9th. And so this is the price action on the 9th. You can see there's really nothing here. Market gaps down. Big previous day. Bid check, bid check, bid check. Not able to rally above the AVWAP. So there's no real reason to rush into that Meta trade right at this time. And so now you've got a bullish 1OP cross right in here, and you get the market getting above the VWAP, and it's starting to challenge the gap. Okay, in here, this is where I would start looking to take a long position in Meta, and that's at about 12 o'clock. So let's see what Meta was doing at about 12 o'clock. Right in here, higher low, okay. Yeah, this is pretty decent. It's starting to get above AV so right in here I think is where your entry point is. You're starting to get the market stabilizing, the market's in the gap. Yeah, that's a nice entry point right in there. And ZS, you'd go through the same process. ZS is also on the 9th, so sorry about the fact that I got the date wrong, but we'll take a look at the 9th and take a look at ZS. So you had that previous really nice day in here, gap up, okay. Now it comes back below the AVWAP, and that position was initiated at 10:13, which is about right here, near the high of the day. There was no reason. The market still hadn't gotten in the gap. The market had gapped down. There's no reason to get long up in here on the high of the day. None. Now it gets back above the VWAP. Okay, here's where you could start trying a long position. And DG was a short. So DG, you're kind of going against the market. If you need a hedge, that would be one way to look at it. If you had lots of long positions and you needed a short, okay, let's see what DG is doing. Just looking at the chart, okay, and this was initiated 10:58 a.m., so about an hour and a half after the open. Market had gapped down, 10:58, puts you right about in here. So you get this weakness right in here. This looks pretty daunting, but you got a lot of very choppy stock. Let's step back and look at the daily chart. The daily chart in this, so right here we've got the 9th. It's starting to compress in here. There's no real momentum. Yes, it might want to break down in here, but there's no big momentum on this particular stock. And not sure if I zoom out, if there's anything that comes into play longer term, but no, there isn't. So the stock is just simply compressing down here near its low, so it doesn't have the momentum that I would personally want to see to justify taking that short. I mean, it is trying to get through this little support level right in here. It is weak relative to the market, but it's so dang choppy. Look at this. Up and down and up and down and up and down. And we've had the market bouncing off the 200-day moving average, and you can see the previous day, lots of back and forth, two-sided price action, just a very choppy stock. So when you have a choppy stock, I'll repeat this again, then what you want to do is you want to set your alerts. You want to see what the stock does during that alert. What did the market do during that alert? If you had gone through that routine here, then you would have been entering at about the time when the market was back above the VWAP and filling in the gap, and that would have told you, I think I'm going to hold off on any kind of short position right now. So that's just my take on DG. I've got 3 more trades to go through. I knew this was going to be a long video. Thanks for bearing with me. I hope you are learning a lot. DG. UAL, short position. UAL, let's take a look at UAL. That stock is super, super weak. So I like the D1 on a short basis. You can see how right now it's breaking back below this trend line. It's a low minus trend line. Today, the market is, let's take a look at what the market is doing today. You can see that the stock is selling off pretty hard. So, decent short position, not able to really bounce well with the market. So, UAL is a decent looking short. On the 9th, it actually finished on its low. And that was an entry at 10:10. So, about 30 minutes after the open. So we'll take a look at that 5-minute chart. 30 minutes after the open, the market had been down that day. And so you can see this big drop. And this is about the short right in here at 10:10. So again, on the low of the day, not bad, okay, as far as the candles in here. Some overlap, some tails, market not doing much. Big volume. Okay, everything looks good in here. You could take a small short in here just because of this price action is very, very weak. And on the D1 basis, you also had the stock on the 9th breaking through this technical support level. I have no issue with taking a short position there, waiting a little bit, see what the market's doing. Market had just recently bounced off of a major support level at the 200-day moving average. So see if the market can fill in that gap. Then you can add to UAL if it's still weak. And the fact that the stock was not able to rally these last 2 days when the market did, so keep these 4 bars in mind because I'm going to look at the S&P 500. And I have to do it this way so that you can see a nice big chart in the video. Look at this strength. What did UAL do? Nothing. It was flopping around on its low, so it did not participate in that rally, which tells you that the stock was weak. And right in here, you can see that the market has a nice bearish engulfing candle. Well, where is all this taking place? Just below the 200-day moving average. So we've had a hot PPI yesterday, hot CPI today. Well, let's take a look at what the market's doing right now. I'm curious. Ooh, those are some long red candles, and you can see lots of chop back and forth, indecision, tries to get back above the high, bumping up against that 100-day moving average, nothing doing. Heavy volume. Could be news related. When you start stacking red candles like that on heavy volume like that, that tells you that there is some pretty decent selling pressure going on. So UAL, a pretty nice short. Take a look at the stock today, and this was on the 9th that the position was initiated, so no problem anywhere in here. Now you're probably going to hold off on adding to any kind of positions. You can establish a short here. Now you're waiting for the market. Market starts to fill the gap. Would you need to add to a short position when the market's been able to recover? Not really. Market starts to rally, stock's not able to get off the deck, so you know that it's got the relative weakness that you want. Ding, 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 ding. This is where you can start to add because the market is backed off of the 100-day moving average today. You can see the stock is through that prior low. We know from the price action it hasn't been able to bounce, so UAL looks like a decent short. You can add a little bit here. Now your average cost is even higher, which is good for a short position. So yeah, now you're back in play on that short. You've got excellent volume in here. Everything looks pretty good. BA, and then one that I'm really interested in seeing what it is doing today. BA, this was a long position. I'm going to go into the daily chart so that we can take a look at what Boeing was doing on a daily basis first. That is some heavy selling pressure in there. This is a long that was initiated on the 11th, which would have been yesterday. This is a bounce. We want to be long stocks that are in the upper right corner. We want to be short stocks that are in the lower right corner. So I'm not too fond of this position right here because when you are trying to pick a long and you're trying to trade a reversal, especially after a big move down like that, you need to form a base over an extended period of time. What's an extended period of time? A month? Maybe 2 months? Make a series of lows at a horizontal support level. Perhaps make some higher low, double bottom, triple bottom, higher low. Something along those lines would tell you that buyers are starting to line up. And then when you get a bounce and a release like that, then you can get long. So not a big fan of this particular trade. Well, let's see, this is on the 11th, so this is yesterday. You get a nice gap up, and this position was initiated at 10 o'clock, which is right after the open, 10:12, so right on the high of the day. Again, no real reason to rush into this trade. We're looking for bullish stocks. If you had set an alert, by the time that alert triggered, which would have been right here, stock goes relatively weak, then relatively strong, you're getting the alert here, you look and you go, oh my gosh, this thing is weak. It gave all of its gains back. I want nothing to do with this stock. It's a very long pullback. This bounce is not going anywhere. And on a D1 chart, the stock is weak. Now here's the final one, Netflix. And I did like this yesterday, and I'll show you why on that daily chart. So even though the market looked good, everything looked good, here's what the stock did yesterday. And so I'm happy for this particular trader because this is a nice trade. You can see how the stock opened at the 100-day moving average. First of all, 2 days ago, long red candle closing at the 100-day moving average. Yesterday, market up, up, up. Stock finishes on its low, finishes below the 100-day moving average on what? On heavy volume, relatively weak. When I saw this trade in the trade log, I'm like, yeah, that's nice. Horizontal support broken, below all the major moving averages. Everything looked great. So let me do one more thing here, and then we're going to wrap this up. We're going to put the SPY up so you can see. So here's what the market did. Market was chopping around. It had to establish that low, and then it rallied. What did this stock do? Tick, 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 lower, below the 100-day moving average. Look at that volume. All the check boxes are marked. So what did the stock do today? Market tries to rally, pull back. Oh, here we go. New high of the day for the S&P 500. Beautiful. What did Netflix do? Nothing. And it's still below the 100-day moving average. It's still preserving these losses. That's because sellers are whap in there selling it. As soon as the market starts to pull back, see you later. Love Netflix. That's a great trade. This is the type of thing that you have to do every day. You've got to go through your trade logs. You've got to take a look at what the D1 market setup was. What's the longer term context? Are we in a strong trend? Are we breaking D1 trend lines? Where are the major moving averages coming into play? Mixed candles, overlapping, light volume, or stacked candles with heavy volume breaking major support or resistance levels. What is that market context? Then we drill down. How does the opening price today play into that longer term picture? What do the candles look like? What's the price action look like? Can we get any sense of direction one way or the other? Is it an inside day with light volume? Then we better trim our trading. We don't need to be super aggressive. We set alerts on stocks that look very compelling to us. So even if the market isn't going anywhere, if we have a stock that's breaking through technical resistance on heavy volume and it's got fantastic relative strength, beautiful. I don't have the market giving me the tailwind I need, so let's set some alerts. Let's wait for that little pullback and that alert to get triggered. Was the pullback brief and shallow? Yes, it was. Okay, the stock is back on track and it's preserving its volume. We can get along here. That's the kind of mentality that you have to get into. And looking at your trade logs and analyzing those support and resistance levels and those market conditions is going to help get you on track. This is a very long video. I hope that you watch it a number of times because I've gone through so many different examples of different trades during this 2-week time period that I think you're going to be able to go back and translate this into your own trading log, not just for the last 2 weeks, but moving forward. Thanks so much for watching. Please leave your comments.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.